President Trump's first 100 days led the S&P 500 historically lower compared to past presidents, but our next guest says the ETF flows suggest investors still remain confident. I want to bring in Todd Rosenbluth, TMX VettaFi Head of Research for this week's ETF report, brought to you by Invesco QQQ. Todd, great to speak with you today. Obviously, a lot of volatility over the last 100 days, but what are the flows showing you?
Well, investors continue to embrace ETFs and equity ETFs and S&P 500-based ETFs. The Vanguard 500 ETF has already $50 billion of net inflows. That's on pace to break a record that it set last year with over $100 billion. We're on pace to have over $1 trillion again for overall ETF industry. We're seeing investors embrace some risk in going into the equity markets with ETFs. On the fixed income side, they're becoming much more defensive. Short-term, treasury-oriented products are what's been most popular thus far this year.
Yeah, and I wonder the degree to which you are sussing out which kinds of investors are participating in these flows. I want to take a listen into what Treasury Secretary Scott Bessent had to say about all of this.
Vanguard, one of the largest money management firms in America, said that over the past 100 days, 97% of Americans haven't done a trade, and in fact, individual investors have held tight while institutional investors have panicked. So individual investors trust, investors trust President Trump.
Okay, so the point he's making, individual investors trust the president because they're staying invested. Institutional is the one that is responsible for the selling. Are you seeing data that support that idea?
So I don't want to get into politics and whether or not investors are trusting or not trusting.
Sure, but in the data.
The president. The data shows that investors that are long-term oriented, buy and hold investors, have been using the opportunity to take advantage using ETFs. Now, not necessarily in the equity markets. Obviously, the stock market has sold off and is still down 10% for the year. But Vanguard 500 is widely used by retail investors and advisors. We're hearing from many advisors at VettaFi that they're making some allocation shifts within the equity market as opposed to necessarily pulling out of the market. We've seen some income-oriented strategies, dividend products. Schwab Dividend was one of the more popular ETFs this year. JP Morgan has some covered call income strategies, JEPI and JEPQ, that have been popular this year. So we are seeing a rotation within the equity marketplace, but certainly fixed income investors that are hiding out in that ultra-short category, Vanguard's product, iShares, State Street, that's not a sign of optimism at all.
Yeah, and speaking of investors looking for safety, your dividend ETF is getting inflows. Are these record inflows that you're seeing? Do you feel that there's a panic that we have to shift into these dividend incomes? And then lastly, on the 3-month Treasury front, do you have an offering there that I'd like to learn a little bit more about myself, just to put something away on the side as well?
Yeah, so we are seeing investors embrace dividend strategies, the stability of dividend-paying companies or free cash flow-oriented companies. So I mentioned that Schwab Dividend ETF that's been popular. Victory has a free cash flow ETF, VFlow, that companies that generate strong free cash flow have the ability to pay a dividend. And we are also seeing some of those short-term treasury-oriented products. So SGov is an iShares product. VBill is a Vanguard product. Those are both great ways to get exposure to the fixed income market. 4% yields, very low fees, keeps you invested in the marketplace in case you are worried about what's next.
All right, and I know that you also have actively managed ETFs that are getting some attention as well. What are those flows telling you? Yeah,
so investors, specifically fixed income oriented investors, have been embracing active management for years. There's now many more of those in the ETF wrapper. So PIMCO has had success. They have an ETF PYLD that has seen about $2 billion of net inflows just this year. That's been very popular. T. Rowe Price has an ETF, TAGG, that has also seen some strong inflows. Investors want fixed income exposure, but they may not want to manage it themselves. They want to lean on the professionals, and many of them are in the ETF marketplace.
All right, we got to leave it there, Todd. Thank you so much. Really
Thanks a lot.
Appreciate it.